Well, g'day there, traders and friends right around the world. I wanted to extend a warm welcome to people who may be watching this YouTube channel for the first time. My name is James, and here, obviously, is the founder of Pivot Point Trading. What I'm going to do over the next 10 or so minutes, maybe a little bit longer, is just walk through the price action taking place across all three of the US markets, and then we'll just recap some of the stocks which have triggered as per our Pro Analysis Workshop class, which we record and post online each and every weekend. As you can see, and most notably on Friday's trading session on the Dow Jones, the S&P, and the Nasdaq, they all took quite a considerable hit. Here we are on the Dow Jones Industrial Average. We're looking at this chart on the daily time frame, and you can see that we closed down close to 280 points. We actually pushed a lot lower intraday, but there was a little bit of buying coming in on the intraday candle. Now, what is most important about this, of course, is the larger type of chart pattern. You can go back on this channel, go back as far as 3 or 4 weeks even, because we've been very, very reluctant and very skeptical on this market to the upside based off from where we have based down here, going back to, really twice in March 2015. We were very, very hesitant to trade the upside bounce, and we actually drew this red box on our charts. We called this the danger zone. All right, if we moved back up into this box, it was very, very dangerous to be looking at long trades because the probability that the market could and very well possibly roll over at this location, really exponentially increased, given that we have been setting up a series of lower highs, which again, which has just materialized, and these other types of indicators warning us not to trade long in the way of bearish divergence. This is really starting to materialize. It's not even most strongest on the Dow Jones Industrial Average. It's really setting up most, or best, I should say, on the Nasdaq type of chart. You can see right here we have a very, very defined potential head. We have a potential right shoulder. Now, this is going back over about 2.5 months if we include this entire left aspect of the distribution as well. People distributing their positions at these locations. You can see how this chart is clearly in a range-bound sideways market move. We have a very, very strong gap between Thursdays and Fridays candlestick, increasing sell volume. You can really start to drill down on the underlying sentiment shift which is taking place on the US markets at this current juncture, at this particular weekend's address. Here we are going back to the Dow Jones Industrial Average, and again, the actual sell-off, the downside which has occurred on Friday, has really given back most of the gains which we have seen over the past 2 weeks, bouncing off from this support level. I was very, very cautious in any bullish trades which I looked at getting into. As a matter of fact, I missed this most recent bullish bounce, and I feel very, very comfortable missing out on that little bullish rally, that little minor move, because it really looks as though we've got a strong rejection from what we call the danger zone, the resistance levels. We've seen shooting stars at this level. We're making a series of lower highs. We've got a doji candlestick on the Thursday. It's almost what we call an evening star reversal pattern, and it's really resolving itself at the moment to the downside. Immediate targets on these markets come in down here at these lower levels, but if you're in that pro analysis class, and this is what I encourage people all around to do, just to view for once, just give it a go. If you're in the class, you're going to get a much better perspective on what to expect, more so moving out into 2, 3, even as far as a month into the future, where these markets could very well be trading as we transition into May 2015. We've got all of the signals right now. We've even starting to get some of the confirmations telling us that look out below. This market is very, very weak. It's rallied on low volume, and we're starting to see again the third top on the Dow Jones Industrial Average. We're seeing it again on the S&P 500. You can see the third lower high. You can see the sell-off coming in down about 25 points on the daily. Look at the increase in sell volume on the overall market compared to this low volume bullish rally. You can see that it's dwarfed it in the way of volume expansion. These are all signals outside of divergence, which is one of the primary indications which we have that a terminal trend reversal is starting to set up, or at least, an intermediate pullback is occurring on the markets to take us back down to more, buyable areas across all three of the US markets. You can see how this, market's been range bound in instance, with the S&P 500. We've almost been in the symmetrical triangle, and it looks as though we've had a false break back into the danger zone. This has been on my chart for over a week now, and you can see the immediate rejection to the downside. We're still not, or the markets haven't essentially broken out yet, but they are very, very close to finally giving us confirmation. We've been waiting on confirmation for what feels like an absolute eternity. I mean, it feels as though these markets haven't really done a whole lot in the past 3 weeks momentum wise, albeit it has been very, very volatile and a very hard time to be a swing trader. I do think that these markets are going to finally commit one direction or another, and my hunch is still telling me be very, very cautious on any long trades which you are still looking to trade. What I'm going to do again in this weekend's pro analysis class is reference tradable ETFs, market ETFs, which are going to give us exposure in the event that we start to see conviction to one side or another. I'm going to give you updates on the Q types of trades on the SPY and also the DIA. We can also speak about some hedges such as SDS and even HDGE. These are very good in terms of risk and reward based on where the market is trading at and the downside potential to where these actual inverse ETFs are trading at. You can go and have a look at these for yourself, but I will give you a breakdown in this week's Pivot Point Pro Analysis Workshop. Outside of that list, a few stocks have actually triggered, which I want to quickly reference. One of those stocks has been Baidu. Baidu this week, we had a short entry here at 212.04. We started to push below it on Tuesday's candlestick right here. We had a long lower wick. We were getting a rejection based off from this engulfing candlestick pattern, this shooting star pattern right here. And we started to push lower below this descending trend line. You can see the descending trend line on my chart right now. What was interesting, of course, is that on Wednesday, we really started to fail below this level. On Thursday, we tanked below it. We closed about 206 or 207. And then on Friday's trading session, which is just passed, we hit our target down here at 204.14. We have made on this particular trade about $8 of intrinsic value on those put options to the downside. A very, very nice trade on Baidu this week. It aligned very well with our overall perspective on the market. And I wanted to congratulate people in that analysis workshop who took the trade and made a lot of money shorting Baidu this week. A second stock which I want to reference has been Google, because Google also pushed down intraday. It pushed down intraday on the Wednesday. You can see it had a little, the bulls tried to at least gain a little bit of control. Very low volume on the Thursday, and today we've really started to push down below that sort of entry at 535.06. We came very close to hitting our first target on Google, at 528.64. Now, the low of today's candle was 529. So if you did exit at the lows of Google today, you would have been in a very nice profitable trade. It would have been, around that $7 area as well. You should still technically be in this if you didn't exit close to your target, because there is still a very good understanding and a high probability that we are not only going to break and hit 528, but we may also come down to 508.50. I will address this over the weekend in that analysis workshop. Also, a couple of other stocks which we have been stalking. This is obviously recaps. This isn't forward looking. Forward looking is pro, setting the actual trades up. This is more so right now, which is going back and just recapping stocks which have made the moves based on the analysis which we've sort of gone over. We're still following GoPro. Now, GoPro is still technically one of my favorite shorts. Same with actually Chevron. Now, both of these trades haven't triggered yet. GoPro hasn't triggered, CVX hasn't triggered, but there is a very high possibility that this is going to be the week that these stocks are going to make the move. We've been stalking these stocks as they've grinded higher, higher, and higher. You've got all of the candlesticks indicating that they are going to roll over. This is what is most exciting about this upcoming trading week. You close the week with a very sinister candlestick across all three of the US markets. You have all of these individual stocks which we've been waiting on, patiently waiting on, and you've got the candlestick signals aligning with the overall markets. You've got the exhaustion gaps, you've got the shooting star candlesticks, you've got the engulfing candlesticks, at those declining exponential moving averages. You've got the oscillators, which are extremely overbought, about to turn down, move back down into the oversold level, or get that natural oscillation between overbought areas and oversold. You can see that we're projecting. Obviously, you can't see my chart now, but I will speak about over the weekend this type of move to take place and for the actual price to drop as well. I'm genuinely very excited for the week ahead. It's been a hard wait, put it that way. It's been a very, very hard wait over the most recent 2, 3, 4 weeks. But it really looks as though this market is going to make that definitive move. What I'd like to do right now is just encourage you. Touch base with me, success@pivotpoint-trading.com. This is going to be it for the weekend market update. I will sit down and record Pro. However, it will be Sunday this weekend, Australian time. It will come out Sunday, US, Canadian, Northern Hemisphere, on that type of time frame. It isn't going to be a Saturday recording posted online. It will be a Sunday. Very rarely am I a day late in the posting, but because of events outside of my control, I'm actually unable to do the larger recording today. I do have a very good syntax of what I am going to speak about. It's all laid out very, very well. And, you know, the soonest I can do that will be a Sunday morning my time, which will translate after being rendered and uploaded. It will be out, you know, even possibly late Saturday evening US time as well. So I'll leave it at that for the weekend market update. If you want to contact me again, success@pivotpoint-trading.com. I look forward to hearing new inquiries, and if not, of course, conversing continuously, moving back and forth with the traders and friends who I work with on a daily basis all around the world, who like to learn how to trade the markets and swing trade the markets. It's very, very a good way, I should say, of trading the US market. So thanks a lot for your time. Thanks a lot. Have a great weekend. Enjoy your weekend, and I'm very excited to see how Monday's trading session will resolve itself. All the best, traders. Goodbye.